Welcome to Entrepreneurial Edge. In this video, we'll guide you through the basics of investing in the stock market. Don't forget to like and subscribe. Are you overwhelmed by the thought of investing in the stock market? Investing in the stock market can seem daunting, especially for beginners. The sheer volume of information and the complexity of financial jargon can be overwhelming. But let me tell you, it's one of the most powerful tools for building wealth over time. With the right knowledge and strategy, anyone can become a successful investor. It's about more than just making money. It's about achieving your financial dreams. Whether you want to travel the world, start a business, or simply enjoy a comfortable retirement, investing can help you reach those goals. Whether it's retiring comfortably, buying your dream home, or securing your children's education, investing can help you get there. These milestones are within reach if you plan and invest wisely. The key is to start early and stay invested for the long haul. The earlier you start, the more time your money has to grow through the power of compound interest. The stock market will have its ups and downs. That's just the nature of the beast. Market volatility can be unsettling, but it's important to stay the course and not let short-term fluctuations derail your long-term plans. But over the long term, the stock market has consistently trended upwards. Historical data shows that despite periodic downturns, the market has a strong upward trajectory over decades. This means that by investing consistently and patiently, you're giving your money the opportunity to grow significantly over time. Regular contributions, even small ones, can add up and make a big difference. Remember, investing is a marathon, not a sprint. It's about endurance and persistence, not quick wins. Think of it like planting a tree. You don't expect it to grow overnight. You carefully choose a spot, nurture it with water and sunlight, and patiently wait for it to grow. Similarly, you need to choose your investments wisely and give them time to mature. Over time, that small sapling can transform into a mighty oak, providing shade and beauty for years to come. Investing is similar. With patience and care, your investments can grow and provide financial security. You choose your investments carefully, nurture them with knowledge and patience, and over time, they have the potential to flourish and provide financial security for your future. Educate yourself, seek advice, and stay informed. So, are you ready to plant the seeds for your financial future? The journey may be long, but the rewards are worth it. Let's dive in and explore the exciting world of stock market investing together. With the right mindset and tools, you can achieve your financial dreams. Before we dive into the specifics of investing, let's talk about the different ways to earn money. Understanding these methods is the foundation of building a robust financial future. There are two primary methods: active income and passive income. Each plays a unique role in your financial journey. Understanding the difference is crucial for building long-term wealth. It helps you strategize and make informed decisions. Active income is the money you earn from actively working. This is the most common form of income for most people. This could be your salary, wages from a job, or income from a side hustle. Essentially, it's any money you earn by trading your time and skills. You trade your time and effort for a paycheck. The more hours you work, the more you earn. It's a vital part of life, but it has limitations. You only have so many hours in a day, and burnout is a real risk. Your earning potential is directly tied to the hours you work. This means there's a cap on how much you can make. Passive income, on the other hand, is money you earn without actively trading your time for it. It's about leveraging your existing resources. It's about putting your money to work for you. This can be through investments, rental properties, or other income-generating assets. Think of it as money flowing into your pockets while you sleep, travel, or even just enjoy your day. It's a powerful way to build wealth. Investing in the stock market is one of the most effective ways to generate passive income. Stocks can appreciate in value and pay dividends. Imagine owning a rental property. This is another excellent source of passive income. You collect rent each month without actively working for it. That's passive income. Over time, property values can also increase, adding to your wealth. Investing in dividend-paying stocks is similar. These stocks provide regular income through dividends. You receive regular payments from companies simply for owning their stock. It's a way to earn money without additional effort. Over time, those payments can add up and become a significant source of passive income. Reinvesting dividends can further accelerate your wealth growth. The beauty of passive income is that it provides financial freedom and flexibility. It allows you to live life on your terms. It allows you to achieve your financial goals faster and potentially retire earlier. Imagine having the freedom to pursue your passions without financial stress. It's not about getting rich quick, it's about making your money work smarter, not harder. Consistent, smart investments can yield substantial returns over time. By understanding the power of passive income and how investing can help you achieve it, you're taking a crucial step towards securing your financial future. This knowledge empowers you to make strategic decisions that can lead to lasting wealth and financial independence. Now let's demystify the concept of stock ownership. Understanding how stocks work is crucial for anyone looking to invest in the stock market. When you buy a stock, you're essentially buying a small piece of ownership in a publicly traded company. This means you own a fraction of the company and have a stake in its future. Think of it like buying a slice of a giant pizza, with each slice representing a share of stock. The more slices you own, the larger your share of the pizza, or in this case, the company. As a shareholder, you have the potential to benefit from the company's success. When the company performs well, the value of your shares can increase. There are two primary ways to profit from stock ownership: capital appreciation and dividends. Both methods can provide significant returns if managed wisely. Capital appreciation occurs when the value of the stock increases over time. This means the price you can sell your stock for is higher than the price you paid. You buy low, and hopefully, you sell high, pocketing the difference. This strategy requires patience and a good understanding of market trends. Dividends, on the other hand, are regular payments made by some companies to their shareholders, typically from their profits. These payments can provide a steady income stream. Imagine you buy stock in a company that manufactures electric cars. This industry is growing rapidly, and investing in it could be very profitable. If the company's cars become increasingly popular, demand for their stock could rise, driving up the stock price. This increase in demand can lead to significant capital appreciation. This is capital appreciation at work. Your investment grows as the company's stock price increases. Additionally, if the company decides to share its profits with shareholders, they might issue dividends, giving you a regular stream of passive income. This can be a great way to earn money without selling your shares. Owning stock also grants you certain rights as a shareholder, including the right to vote on important company matters. This means you have a say in how the company is run. You become part owner of the company with a vested interest in its success. This can be a rewarding experience, both financially and personally. It's a powerful feeling to know that your investments are helping companies grow and innovate. Your money is being used to develop new products and services. Remember, investing in the stock market involves risks. It's important to be aware of these risks and to invest wisely. The value of stocks can fluctuate, and there's no guarantee of profit. Market conditions can change rapidly, affecting stock prices. However, by understanding the basics of stock ownership and approaching investing with a long-term mindset, you can mitigate these risks and position yourself for potential financial success. Long-term investments often yield better returns and help you achieve your financial goals. Ready to embark on your investing adventure? The first step is to choose a brokerage account. A brokerage acts as your gateway to the stock market, allowing you to buy and sell stocks, bonds, and other investments. Think of it like your online investing hub. There are numerous reputable brokerages available, each with its own strengths and fee structures. Some popular options include Fidelity, Schwab, and Vanguard, to name a few. When selecting a brokerage, consider factors like trading fees, account minimums, research and educational resources, and customer support. Once you've opened your brokerage account, the next crucial step is to determine your investment strategy. This involves identifying your financial goals, risk tolerance, and time horizon. Are you investing for retirement in 20 years? Are you saving for a down payment on a house in 5 years? Your investment strategy should align with your specific circumstances and objectives. The key takeaway here is that there's no one-size-fits-all approach to investing. Your strategy should be as unique as your financial goals. Remember, investing isn't about getting rich quick, it's about making informed decisions that align with your long-term goals. By choosing the right brokerage and crafting a personalized investment strategy, you're setting yourself up for success in the exciting world of stock market investing. Thank you for watching Entrepreneurial Edge. If you found this video helpful, please like and subscribe to our channel for more content on investing and entrepreneurship.